So 2 days ago, I did a video on FuboTV. It was titled "From Soaring Highs to Crashing Lows: The FuboTV Stock Saga." So on earnings, which happened last week, price gapped higher, only to close lower. Coming into this week, price continued to see a sell-off, and although we had a daily bias level at 250, it's not surprising that price breached the level once again due to this pullback, price penetrating the zone 100%. So there were no remaining unfilled buy orders. Now, from that first video, I did receive 2 comments. It was at the time, price was at 260, which would have been right here. Do you think it would go down? And then another comment was, I bought at 327. Would you sell and buy back lower? Now, I ended the video by saying that Fubo was in an uptrend, but I didn't get any levels to buy levels. I did give 2 targets, one at $4, one at $5. So the question is, why are we seeing this massive sell-off? Well, the broader market is selling off. In particular, tech is the weakest. And just kind of summarizing things a bit. So they're not making any money. They had a loss per share of 17 cents on revenue of 313 million. Both metrics beat Wall Street estimates. So what this is saying is that Wall Street was expecting losses, but their results were a little less than what Wall Street was expecting in terms of losses. Now, FuboTV is unlike Amazon or Netflix or Hulu. They don't have any exclusive content. So what is the proposition for someone to sign up for their streaming service? It's also important to note that the platform reported both that the net loss and adjusted EBITDA margins increased by 2,000 basis points. And the margins have to increase by over 1,000 basis points to get anywhere close to break even on a cash flow basis. Fubo ended the quarter with a cash balance of only 300 million. Company burned 71 million in cash from operations and 148 million from operations during the first half of the year. Thus, they have enough cash flow until about 2025. And if you kind of summarize, some of the key financial metrics from the second quarter of this year, which they passed, which is just what they reported on, relative to the second quarter of last year. The numbers improved, but again, they're still not making any money. So the question is, would you buy? Well, we can see that on the monthly chart, prices are making lower lows. But if I was to put up an RSI indicator, you would see that the indicator would be making higher lows. So we have divergence, meaning we have a bottoming out process taking place from this collapse back in 2000, back in 2001. All right, so that's the first macro bullet point. Now, when you go to the weekly chart, now on the weekly chart, price is still technically in a downtrend. We haven't closed above this pivot high, which would signify the Dow trend has been violated. Now, despite the continued downtrend, we did get a crossover of the 13 and 26 simple weekly moving average. Now, in that video, I did say price was in an uptrend, and that was on the daily chart, as price was making higher highs and higher lows. But potentially, that uptrend on the daily chart is just a pullback on the weekly chart. And so that uptrend on the daily chart, potential pullback on the weekly chart, is just part of price bottoming out on the monthly chart. So you have to take all those things into consideration: the fundamentals, the sentiment, the broader market. Now for the bulls, for those two individuals, that at least that one individual that bought at $3.27, price is now butting up against the 50-day moving average. That's going to serve as short-term support, although your momentum moving averages have been breached. This is the 13 and the 26 simple daily moving average. Price is also about 20 cents away from the 200-day moving average, and that should also serve as support. Now for the bulls out there, you do have a golden cross where the 50-day moving average crossed over the 200-day moving average. So again, you do have signs of a bottoming, but where do you buy? So I'm going to take this off the chart. Now, you have a low here, current low here. Tomorrow's Friday. You have a pivot high here, pivot high here. So potentially you have what appears to be a support resistance band at current price. You have the 50-day moving average within that band. You have the 200-day moving average right below that band. So this might be an area one would consider buying. I would put a stop loss below $2 or at the $2 level. Let's put an entry. We're going to put an entry at the $2.25 level. Now what I would like to see is some type of, I'm not going to say a reversal pattern, but some indication that price wants to go higher. I would love to see price actually fall, but then the close higher, and potentially take out the most recent daily highs. Because if price can do that, price has the opportunity to move higher, as there are no sellers in these candles here. These are extended range red candles. So hypothetically, that's where I would consider buying, between $2 and $2.25. With the broader market selling off, it's going to be interesting how that affects FuboTV. An individual stock move is only 20% influenced by the company's itself. 40% of price of a stock is influenced by the sector that it belongs in, and then another 40% is based on the broader markets. So right now we're seeing a sell-off in the broader markets, which is why I'm saying entry should be below the band. Now, I don't like all this price action here, meaning I don't really see an imbalance between buyers and sellers, with the exception of this move higher here, which happens to be within our zone, buy zone. And the volume leaving this area was above average. So I like this setup for a potential bounce. Look for a really short-term target at $3. If we can get $3, move your stop to break even. Again, this is not an A setup, but you do have confluences to support price at least pausing and reacting. So I'll monitor the price action over the next week or two, and then I will make another video. But that's how I will handle FuboTV if I was looking to go long. Thanks for watching. Subscribe. Please like the video.